Hey everyone, so I did a giveaway on my 10 Bagger Stocks VIP Instagram page, and the giveaway was to win me analyzing someone's stock of choice. And my friend Justin Alexander won, and he picked HEPION Pharmaceuticals. I never took a look at this company before. I don't know much about this company, but I did a little bit of digging very quickly into it, not too much. So let's take a look first at the chart. Now, I didn't look much into the chart at all. This is the first time I'm really taking a look at it. So let's take a look at what I see overall. This is the weekly chart, and this goes back into around 2019. Okay. Just first thing I'm noticing, potentially. Clear resistance downtrend line on the weekly. And then clear support line on the weekly near all those lows. Now, it keeps bouncing off this same area multiple times on the weekly. Now, it did break it this time. Where was the low over here? The low was 151, and the low it hit here was 145. Not much of a break. Pretty much a double bottom over there, or a triple bottom if you want to include this one. This was 132. But it clearly keeps bouncing off of the same area, even over here. Now, obviously, the bulls are going to want to hold that area. Right now, the stock is trading at $2.03, so it's a decent amount away from that support level. Trading within this tightening range, obviously, a break of this range would be bullish, would suggest more bullish upside, and a break below this range would suggest bearish downside. Right now, I don't think the bulls have to be concerned about this breaking bearish because we do have a lower wick of buying the dip on the weekly chart. You've already had a bit of a pullback. RSI starting to show some strength. I believe we're getting a bullish MACD cross on the RSI on the weekly there. So there is some good signs. Volume is not that high, 5.4 million on the whole week. So this stock doesn't have too much traction right now, but has some. Just over a million volume on the daily chart over here. Daily chart, you know, it's a little bit confusing. There's no real sense of direction here. I mean, probably a little bit more of a downtrend in the short term because you had this high, low, lower high, lower low. And bears are going to be looking to set a lower high on the daily chart over here. So right now in the short term, at least, it's on a downtrend. Had this big volume spike near the high, passed that level by a little bit, but it didn't go much further. So this is a clear resistance area up here, which is around $2.32. This whole candle is the range we're going to be looking at, $2.30 to a low of $1.99. Bulls ideally are going to want to stay above that $2 mark, that $1.99. Let's give it $1.95 to give the bulls some room. If they can start holding a higher daily low pattern, that would be ideal. But right now, in the short term, the bears still have the overall momentum on the daily chart. The bulls are just getting a bounce over here off of that 50-day moving average. Bulls want to see a further bounce, break this resistance area over here, tap this, pull back, set a higher low, hold above that middle Bollinger Band, and then break towards the upside. That's what the bulls are going to want to see. The bears are going to want to step in right around here, prevent it from breaking this resistance level, which is around 210, and then sell back off and continue to set a lower low below 185. That's what the bears want. That's just taking a look at the short-term chart. Short-term, the momentum is in the bears' favor. Really short-term, slightly bull, but short-term on the daily chart, bears' favor still right now. On the weekly chart, looks okay. We're setting that higher low on the weekly potentially. Bulls want to see follow through, break the high of last week, which is 205, and then break that resistance at 2010 and see follow through and then head up towards these resistance areas to break this area. That's what the bulls are going to want to see. Bulls definitely want to hold last week's low of 185. And if bulls can hold that low this week, then we'd be looking towards this sloping support line. Okay, but I'd keep an eye on this triangle because this seems to have been forming for a while, and it is pretty evident where it's touched this top area several times, touched this bottom area several times. A break of this triangle could suggest a big breakout towards the upside or towards the downside on the weekly chart. But it could still take a few more weeks or a month for that to play out. The long-term trend, this is looking at on the monthly, not pretty. Would you want to invest in this for the long term? You look at the long-term chart and the answer is probably not. Massive bearish head and shoulders back in the day from 2014, hit a high in 2015, big pullback, big bearish head and shoulders on the monthly. The stock has steadily been taking money from investors. If you invested $3,500, you're down to only $2 right now. So I was taking a look at the long-term chart, and it's not pretty. I don't know if it was the same company back then, or it was a different company and they took over the ticker or anything like that. That I don't know. But if I would look at this long-term chart, I would not want to be in this stock for the long term. Same with the yearly chart. I know we got this high volume, probably a lot of interest this year compared to previous years. So again, we're really going to want to be looking at this tightening triangle over here to suggest which way it's going to break if we look on that weekly chart. But it could still take a few more weeks or even a month for that to play out. And look at those levels that I mentioned. Also, aside from the chart, I took a look into the finances. Right now, the company's not making any money, and that's a little bit of a concern. And that's a concern with most pharmaceutical companies, and this is what makes them a lot higher risk, but a lot higher potential reward as well, is that a lot of these companies aren't making money, or they're not making a lot of money, and they're still in development phases of all their products and drug trials and stuff, which may or may not go through. They may get the approvals, they may get the results that they want, and they may not. And that's the big risk of investing in these types of companies. And that's why things like this, when you look on the long term, tend to happen with a lot of these pharmaceutical companies, is because it takes so long and there's so much cash burn and so much dilution and so much debt and all these stuff that these companies need to raise just to make it happen, just to finish their product. So that's a big risk with a lot of these pharmaceutical companies, and that's why they tend to not perform very well. But then suddenly when they get the approval or something, they'll shoot up a lot. They'll kind of get all their momentum out in one push, and then oftentimes they drop back lower. Higher risk stocks are pharmaceutical companies for sure. But obviously what this company is doing does sound fairly promising. You know, working on hepatitis, cirrhosis, liver failure, cancer. I don't know what NASH is. 500 million people worldwide are at risk unless new therapies are found. I absolutely agree. This is something we need. If they're able to solve and improve these issues that they're talking about, such as hepatitis and cirrhosis and liver failure and cancer, obviously this could be a good long-term investment. But remember, like I said, nothing is a guarantee. It's still in clinical trials. And right now, the company is burning cash and they're not making money. So these are the risks that you're looking at when looking at this company as a long-term investment. And, you know, so when you put that at play and you put it on like a scale of risk to reward, you're risking probably 90% plus of your capital, because that's how much these stocks can drop in this process. And you've seen that on the chart. Stock has dropped more than 99% if you invested up here. Okay. But obviously, if they are able to pull through and get the FDA approvals and all this stuff for these things that they're working on, which are very serious things, then the stock could shoot up hundreds of percents or thousands of percents. And you have to weigh that risk to reward and say, you know, is this the risk that I'm willing to take on this company? Now, if you're not in it for the longer term, then I would look at the short-term levels that I mentioned on the daily chart. Thanks, guys, for watching. I hope I helped you out, Mr. Justin Alexander, and I look forward to providing more videos for people. And if you want me to analyze your stock, right now I'm offering it for $50. I'll do an analysis. I'll drop a video on YouTube like this on your stock. Go to 10baggerstocks.com. You can pay right through there in the link. There's a lot of other links and stuff on there, a lot of other information for you. I'm offering this now. I might not be in the future, or I might raise the price in the future. I think $50 is a good price right now for me to spend this time and make this video and render it and put it online and all this stuff right now. Right now, I'm just helping out the community, and I'm giving priority to people who really want their stocks analyzed. But right now, I did this was a free giveaway, and I'll do more giveaways in the future. Thanks, guys, for watching. Remember to check out my site, 10baggerstocks.com. And remember to press that like button and share and subscribe. I love you guys. Have a great night.